My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to make you a little money. My job's not just entertaining, but to put it in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Now, we keep waiting for the bull to get exhausted. We figure it's got to be real tired after a 7-week stampede, right? But sometimes we forget that it's a proverbial bull, not a real bull. And it's an agglomeration of all sorts of stocks that down and outers that are recovering, plain old value, growth, and even super growth. We can't forget that each of these groups has taken a turn for the better during this amazing period of strength. Even as today was pretty much a sedate day, with the Dow gaining 57 points, S&P declining 0.01%, NASDAQ advancing 0.35%. Now, earlier in the week, Fed Chief Jay Powell said he's now as worried about a slowdown as he's worried about inflation. And he doesn't want all of his hard work to end up causing a recession. That plus this thing called the dot plot, a quarterly compilation of what Fed officials are thinking about the future direction of interest rates, show that we might be on track, get this, for 3 rate cuts in 2024. Possibly starting as soon as March. And that spurred a huge amount of buying in the stocks that really need lower interest rates, mostly indebted companies that have been hurt by the endless tightening cycles, but also retailers, home builders, material companies. Today, though, New York Fed President John Williams told CNBC, we aren't really talking about rate cuts now. That stopped the rally for the interest rate sensitive stocks in its tracks. But did the money leave the market? It came right back to the super growth stocks that never needed the Fed's help to grow. I'm talking about companies like Salesforce and Palo Alto Networks, 2 CNBC Investing Club faves that just won't quit. Problem is, I frankly don't buy what Williams was selling. It was only 2 days ago that Jay Powell offered his views, which made me realize I was wrong about how quickly the Fed would actually be cutting rates. I got there by parsing everything that was said and done, from the press conference to the dot plot, and there was no way you could argue seriously that rate cuts weren't on their minds. No way. However, we're going to have to get used to this kind of back and forth as the Fed's reluctant to play with an open hand between meetings. And with that in mind, you know what we ought to do? Let's take a look at our game plan for next week. All right, so Monday, not a lot of action there. I actually left it blank. Rather than try to foment something, there was like a Heiko that's coming, that's reporting, but I said, no, let's just say not that much happening. Because, come on, it's a vacation kind of thing week. The earnings parade, though, starts on Tuesday. And that's with FedEx after the close. The remarkable company has gotten re-energized under CEO Raj Subramaniam, who's given us the holy grail of business. He's cutting costs dramatically while revenues are going higher. It's a wonder to see, and we've been behind him from day one. I think FedEx will deliver a terrific quarter, but if there's any shortfall whatsoever, please take advantage of the pullback to do some buying, as Subramanian is engineering a long-term refresh of a company that had been showing choppy returns for some time. I like this new FedEx a lot. By the way, I like the e-commerce for the holiday, too. Wednesday morning, we hear from General Mills, which has seen its stock fall from $90 in May to $65 now. And I'd say a lot of that decline comes because of the fear of these GLP-1 weight loss drugs that they could be cutting into their cereal and snack food businesses. Hey, listen, with brands like Cinnamon Toast Crunch, Cocoa Puffs, Betty Crocker, and Pillsbury, you think they'd have plenty of reason to be worried, right? Except that every company from the packaged food industry that's reported so far has said they've seen no slowdown whatsoever from these drugs. And after that, what happens? Well, their stocks go right up. General Mills has a fantastic pet food business, too. And I find it unlikely that any pet is actually currently taking Wegovy or Mounjaro or any of those other wacky names that Novo Nordisk and Eli Lilly have come up with for their once-a-week shots that can cause you to lose about 20% of your body weight, although there's plenty of lost muscle in there with lost fat. After the close, Micron reports. And this commodity chip maker's had a bad habit of running to the quarter. In other words, the stock goes up into the quarter and then disappointing, causing the stock to experience a severe drop, only then to find new, even more aggressive buyers. My take, if you can handle the volatility, buy some Micron ahead and then buy some after, as this company's prospects are directly tied to an economic expansion, which I think is going to refresh. If the Fed follows through with what Jay Powell talked about Wednesday, not with what the New York Fed president said today, then Micron's chips will soon be in high demand. They're cyclical chips. And don't forget, we also have that new refresh cycle coming from PCs. That will drive plenty of demand, too. That's something I've been talking about that no one else believes in, but believe me, I'm going to be right. Thursday morning, we get results from Carnival. Yes, the cruise cohort, which includes Norwegian and Royal Caribbean, seems to find a new analyst champion almost every single day. The analysts who cover these stocks want to be positive on all of them, but the one that's been bedeviling the most is Carnival, which tends to report weaker numbers than its cruise compadres. I think you're going to get some upgrades no matter what, as analysts wax about how cruises represent great value. Now, recently we spoke to Cintas, had them on the show here. Company primarily serves small, medium-sized businesses with all sorts of services, from uniforms to first aid kits, fire protection. Cintas has seen no slowdown despite the Fed's efforts to slow the economy. When we listen to them this time, I bet we'll be stunned that this company can keep putting up insanely good numbers. Boy, if the market goes down on any of these days, buy this stock. You know what? I feel the same way about Paychex, but Wall Street doesn't. Even as the stock of this payroll processor has done well, very well over time, and it pays a terrific dividend. Just be aware that Paychex catches more than its fair share of downgrades, even when it does well. It's unfair. Life's unfair. After the close of the most important quarter of the week, Nike. I think this one's very much a study in the psychology of Wall Street. The community of analysts who covered Nike had turned very bearish after a few light quarters, but there's no sense of worry now. Of course, then it was all the way up here. They now like it as one after another analyst upgrades it. I get the sense that even up here at 121 and change, far removed from the bad old days of late September when it traded at $88, there's still plenty of analysts who want to get more positive. Therefore, I think Nike works both before and after. Finally, the Fed likes these personal consumption expenditures. They call it the PCE data. And we get those every month, and frankly, they've become a lot more important under this Fed than other Feds. I think Jay Powell really likes them. I found myself thinking that maybe this guy Williams, the Fed spoiler, wants to see these numbers because they might be running too hot. But I think that we may finally be through with that really scalding inflation kind of numbers. The question now will be, are the numbers too cool? So here's the bottom line. The market's been up week after week after week, so everyone's waiting for a breather. But we may not have one next week if all these companies report the kind of numbers that I'm expecting. 'Tis the season for upside surprises. Enjoy them. They won't last forever. Let's go to Chad in Washington. Chad.
Hey, booyah, Mr. Cramer. Thanks for taking my call.
Of course. What's going on, my friend?
I was wondering, now that they finally posted a solid quarter, is it finally time to buy the next Nike Under Armour?
No, I don't think, I can't go for that one. I don't think it's the next Nike. I did think the number was a little bit better. I have to admit that. I think the stock could go to 10, but I'm not looking for a big move. I'm just not. Let's go to Sam in Pennsylvania. Sam.
Jim, how are you doing?
I'm doing okay. How about you, partner?
Jim, I'm doing all right. I'll tell you, the hottest buzzword I hear on Wall Street right now, it's got AI. AI this, AI that. Everybody's focused on the best GPU. NVIDIA seems to have it. Who knows? Anyway, as we head into 2024, I think we got to look at some of these, large to mid-cap stocks that could be the next Mag 7. And one of them, if NVIDIA has the chips, NVIDIA and AMD have the chips, I think Snowflake might have the data warehousing ability with their software. And if I had to guess, I think Snowflake's going to be a big beneficiary of all this spending going into AI. What do you think?
I agree with you. I think the key thing is there are a lot of companies that want to get into artificial intelligence. They don't want to just spend all the money, okay? They don't want to just go buy a lot of NVIDIA chips, not know what to do with them. So you rent the cloud through Snowflake, you watch their analytics, you figure out how to use it, and then you go big. And that's why I think Snowflake's going to have a dynamite 2024. Let's go to Ian in North Carolina. Ian.
Jimmy Chill, how we doing, my friend?
Oh, man, I'm trying to keep a sneeze back, frankly. I don't know if I can. Nobody on TV ever sneezes, so I don't know what to do.
Well, hey, I've got my eyes on Parker Hannifin, but it seems to just keep going up, and I can't find an entry point. Should I stay away, or is there still room to run?
No, it can go higher. This is really one of the premier industrials in the country. Nobody talks about it. It did hit a 52-week high today. Wow, what a high. Why don't you buy half now? And if it ever comes in, which I don't think it will, you'll still have something on the books. It is really a hot stock. It acts like a big artificial intelligence stock here. All right, everyone's waiting for this rally to take a rest, but that may not be the case if the companies that are reporting next week give us the kind of numbers I'm expecting on Mad Money tonight. Patrick Doyle, the turnaround artist who made Domino's Pizza actually taste good, has been serving as executive chairman, and he's working real hard, his sleeves rolled up of Restaurant Brands International. And the company's seeing some real strength here since he's gotten in. So after its recent run, is it too late to get in the stock? they got those great brands, Burger King, Popeyes. I'll give you my take. Then there's a new powerhouse venue in Las Vegas. It's called the Sphere. And while it might be a marvel to look at, could it be a marvel for your portfolio? I'm taking a closer look at the extremely speculative stock and sharing where I come down. And even amid record highs, you still have to hold yourself in just a little diversified portfolio, handle any major market move because you don't know when it's going to come down. So I'm sizing up your portfolios when we play MI Diversified. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.